Mr. Chair, I rise today in strong opposition to H.R. 2799, a bill that would cause significant long-term harm to both small businesses trying to raise money and mom and pop investors trying to save for their retirements. A primary reason our capital markets are the envy of the world is because investors have confidence in the financial products that they're investing in. That confidence is hard-won, to be sure. It is the result of a robust disclosure regime that has been in place for decades and requires public companies to transparently and accurately tell investors about the inner workings of their businesses, their financials, and the risk involved with purchasing their shares. Investor confidence is also rooted in strong legal protections for investors and their right to have a say in the company's direction through the proxy process. And importantly, investor confidence is based on having a strong enforcer, the Securities and Exchange Commission, or SEC, that sets clear rules of the road and keeps fraudsters out of the system. Now, while our capital markets are far from perfect, trillions of dollars are invested every year because investors are confident that they won't be ripped off. Unfortunately, the bill before us today threatens to undermine that investor confidence. First, H.R. 2799 would expand the number of companies that are able to offer securities without needing to register with the SEC or provide critical disclosures to ordinary investors. This expansion will only benefit moderate to large companies rather than the small businesses this act purports to help. By exempting more companies from public SEC registration requirements, this bill expands the size of the private securities markets, which are growing rapidly and already outnumber the public securities markets 2-to-1. Second, this bill makes it easier for financial middlemen to peddle opaque, illiquid, and high-risk private securities to retail investors who won't receive the information they need to make informed investment decisions. This isn't democratizing finance or creating investment opportunities. This is Wall Street creating another target to dump its bottom-of-the-barrel investment products into retail investors. Private securities, compared to public securities, are significantly more risky and more volatile. Less risk of what they are being sold or the financial ability to withstand them. The bottom of the barrel, private securities that will be sold to retail investors as a result of this bill are especially dangerous because they will only be offered to retail investors after private equity and venture capital funds have already passed on them. It is important to notice that 90% of startups fail, and private equity would love to dump these stocks on your constituents. Third, H.R. 2799 undermines the ability of state securities regulators to help small businesses raise capital and stop fraudsters. State securities regulators are on the front line of our capital markets, investigating complaints of investor fraud, enforcing state securities laws, educating investors about their rights, and helping small businesses to raise money to fund their goals and comply with the law. We should not preempt states by blocking these important overseers from doing their job. To summarize, H.R. 2799 is a Wall Street wish list that collectively exempts big corporations and investment funds from transparency and accountability while gutting critical legal safeguards for Main Street investors. By weakening investor protections in numerous ways, this bill would allow fraud to proliferate and retirees and other mom and pop investors to be ripped off by bad actors. This bill will ultimately harm confidence in our capital markets while doing nothing to assist the very small businesses the bill purports to help. In fact, as investors lose confidence in our markets, small businesses would see their capital costs rise, not fall. So I want to thoroughly debunk the notion that this bill somehow helps small businesses, because the truth is that it would do just the opposite. I'm very supportive of small businesses, and in fact, I have worked extensively this Congress with Chair McHenry on bipartisan ways that we can help small businesses raise capital. We have worked together to strengthen crowdfunding and to change the rules on accredited investors. There are several policy solutions that we have agreed on that represent targeted ways to increase capital formation without harming investor protection. In fact, we worked together to pass 13 bills last year that represent bipartisan, common sense reforms that support small businesses, enabling those who are knowledgeable about the risk of private securities to make informed investments while ensuring robust investor protections. Now, most of these bills also passed under suspension on the House floor. So there is a bipartisan way forward on this issue. But instead of working with Democrats to get these bipartisan bills to the president's desk, Republicans have packaged together this toxic combination of partisan bills and are focusing their time and energy here. Democrats on the Financial Services Committee voted unanimously to oppose this bill at a markup last April, and so I urge all of my colleagues to unanimously reject it on the floor today. Thank you, and I reserve the balance of my time.
The gentleman